Hello, my Teaserking family. How is everyone today? I hope all is well. I am fine. My foot's a little tender. I notice I'm getting gout more easily and more often. So I got to figure this out. So I probably won't be eating for a whole week. We will see. Definitely not today. That's for sure. Um, So let's see. We got basketball yesterday. We had the Final Four. And our scores were Connecticut 86-72. We won. We had Connecticut minus 10.5, 11, somewhere in that neighborhood. And it was 158. So I think it stayed under. And Purdue 63, NC State 50. We lost. We had 9.5 in NC State. I didn't see the ending, but there was, comes down to close. And then we have Connecticut, Purdue Monday on TBS. So again, I can't watch it. I looked into how do I get it, right? And TNT. So I go into TNT and I try to log into it because I have Tubi, and I go, okay, let me see what I can do. And then it says, who's your provider? And I go, well, Spectrum. And they said, well, Spectrum doesn't carry it. So you're having a freaking Final Four that's not on regular TV. And then you follow it up with the final not on regular TV. So I think what's happening is there's just no demand for it. And so they have it on the second-rate channel TNT. It's sort of like how the NBA was before Magic and Bird, like in the late 70s. It was on tape delay at midnight on CBS. They weren't even on live. And it sounds like that the popularity of the NCAA basketball has gone down so much they can't even put it on CBS. That's my thought, because that's ridiculous. I mean, it's not even dependent on, it's dependent on my internet, which is Spectrum. And they don't carry it. It's like college football. I can't get ESPN because it's not on it. So I don't watch the games because they're on ABC. So I watch it on YouTube. So I don't have enough interest to watch. Maybe I'll watch it on YouTube, the Purdue game, just to see how I lost and to see how good. So now we get to Monday night. We get to the final game. Now everybody loves Connecticut. We don't know how good Purdue is. That's why I want to watch them. Connecticut is 6.5, 146.5. And let's see. No General Chow yesterday as they were on vacation. How the hell do you go on a whole vacation? I mean, go for a couple of days here and there, and you're closed Sunday anyway, so just close for 2 or 3 days. But you want to raise your price on General Chow from 11 to 15, and then so you're making so much money you can close for 2 weeks. Doesn't sound good. All right, so we got Purdue 63-50. A 113 game, very low scoring. The over-under on the game was 146. Wow. And then Alabama, Connecticut, 86-72, which is a 158. The over-under was 161, so it was close. People actually bet on Alabama as the line ended at 10.5. So when I see this spread, 6.5, and 140, call it 6 against Purdue. The question I have is, when I look at the last few games, Purdue wins 63-50, so they're not scoring. Before that, Purdue played Tennessee 72-60. So Purdue's playing defense with the big guy, 50 points and a 60 points, the last two, both in the 130s. Connecticut beats Illinois 77-52. So they get a 129 against a high-scoring team like Illinois, holding them to 52. So I'm going to look at the under in this game of 146 with this Purdue defense. And I think for the few times you have the big men matching up, they both have good centers. So they're going to play each other. So they should neutralize it. As far as the 6.5, I haven't decided yet. I'll have to quickly watch the game on YouTube, Purdue. Little upset that I can't get TBS, of course. I think that's ridiculous, but there's nothing I can do. Drinking green tea with lemon and ginger. And I got water with a little, there's that cherry, tart cherry for the gout. So I got that. And everything else. It was in my knee, and then it left my knee, and then goes down to my foot. So I love how it moves, like goes to your knee, finally gets better in your knee, but then it goes, and then you get it in your foot, and then it goes to the other foot, or it moves around the foot. I don't know what I have. It's the strangest thing, and I don't know what I'm eating. I think it's sweets, but I'm not eating that many sweets. I have like, one donut or something. I'm not eating, a big freaking cake or anything like that. So I don't know. I gotta figure out what I'm eating and what I'm not eating. I know I've changed a little bit because I just got bored of just salads, chicken, and meat. We'll see, but I gotta definitely figure out my eating. All right, so that's what you have. So Connecticut 6.5 probably wins 145, 146. I think that's an under. But I can see, the question is what kind of defense does Purdue have? And from my initial analysis, Purdue does not have, they have an 84-70. They give up 70 a game, where Connecticut's an 81-64. But Connecticut's the A team. Purdue's probably an A team or a B team, at least they look like it. Yeah, they beat Gonzaga 80-68. So this should be a very low scoring game. Alabama got 72 on it, but still it was a 158. But Alabama's got a terrible defense against Illinois. It was a 154. No, against Illinois, that was against somebody else. Yeah, Connecticut, Illinois was a 129, 77-52. And yesterday's game was 86-72. So, yeah, I think this will be low scoring. All right. Gold, silver, no update because they don't work on the weekends. They'll be back tonight. They start Sunday night. It starts Sunday night. I think it's China that starts it. So that's their Monday morning. They're like 12 hours ahead. So one thing I want to look at first is the Zimbabwe launches new gold-backed currency. Now, we knew they had launched gold-backed currency. I guess they were saying they're launching it, and now it's actually, you've got the money. So now they've actually come out, and that's what the gold-backed Zimbabwe looks like. So it's not like we're going to walk in with gold coins. It'll be backed by gold. That way it's, again, it has to be, keep in mind, so the medium of exchange has to be portable, so it'll be in your pocket. So really the dollar, the look of this really is the best look, right? You don't want to be carrying around dollars. It's scarce, yes, gold scarce, divisible for small exchanges. Banknotes come from 1 to 200, so very divisible. Fungible, the same, replaceable, yep. Acceptance, yep. And durable, yes. So it meets everything. Everybody wants it. So what you'll do is if you get this 10, if you want the gold, you go to the bank and they give you $10 worth of gold, whatever that might be. In the latest attempt to stabilize an economy that has lurched from crisis to crisis for the past 25 years, sound familiar? Unveiling the new note, Central Bank Governor John Matuzak said the ZIG would be structured and set at a market-determined exchange rate. So they're letting the market determine the rate, not a fixed rate. The ZIG replaces the Zimbabwe dollar, the whatever, that had lost 3/4 of its value so far this year. Well, I don't know how you can value it, but let's just say it doesn't have a value. Annual inflation in March reached 55%, a 7-month high. Again, how are you measuring it? Zimbabwe's have 21 days. Now, here's what I wanted to read, which is probably going to elevate into Russia, China, and BRICS. They have 21 days to exchange old inflation hit notes for the new currency. However, the US dollar, which accounts for 85% of transactions, will remain legal tender, and most people are likely to continue to prefer this. So there you go. You have the gold-backed currency, but you have options of the US dollar. So why would you use the US dollar if you can use gold-backed currency? The new ZIG banknotes come in denominations between 1 and 200. Coins will also be introduced to overcome the shortage of US coins, which has seen people receive change in sweets, small chocolates, and pens. Mr. Matuzak said the new currency was being rolled out with the immediate effect, and banks must convert current Zimbabwe dollar balances to the gold back. So you got 20 grand in the bank, you're going to get 20 grand. Well, that's what I want to see is it dollar for dollar, which doesn't make any sense, but let's see. He committed to ensuring that the amount of local currency in circulation was backed by equivalent value in precious metals, mainly gold or foreign exchange, in order to prevent the currency losing like its predecessors. Zimbabweans have a historic mistrust of central bank. Who doesn't? Dating back to 2008 when it was printing Z10th notes while inflation had run out of control. It then established its own currency and for many years only used foreign banknotes, such as the dollar or south. So they don't even trust their own money. In late 2016, the body introduced a new currency called the bond note that was backed by the US dollar loan facility. The then central bank governor John Matuszak vowed it would remain on par with the U.S. dollar, but the bond note crashed when the government began inflating or printing too much money. See, this is why you have to go to gold, because you're still printing money not backed by anything. You can't back it. It would remain on par with the U.S. dollar. Oh, yeah, okay. How is that? But we're printing ours to nothing. Promises has now been made by the central bank's new governor that overprinting will not be allowed to happen again. Yeah, okay. But public reaction on Friday to the latest currency reveal has been subdued. We now end up in the same place where we started, where assurances are being given to the market that the government will live within its means, which won't happen. The political culture has not changed. The critical point is discipline on the part of the authorities, which won't happen. The announcement of the new currency comes as the country is grappling with the effects of a serious drought, which has destroyed half of the country's crop of the stable food maize. So, water shortages, national disaster over drought. So, I'm not sure what I got out of that. Right? So, where I'm expecting them to go, what they don't say is the conversion. And if you got a gold backed currency, why are you using the US dollar, which has no value? And what a thing to attach yourself to, which also makes we have to print more dollars, which we can't do because our dollar's worthless. So I don't understand. So if Zimbabwe is going to a gold backed currency, why do you need the US dollar? Why don't you just back it by gold? And if you have it backed by gold, then you don't need the dollar. I find it hard to believe that you can take your inflated dollar that's worthless, come out with a gold backed dollar, and just the banks have to convert it over at the same price. Right. So what are you converting it to? Let me get Dario a picture. What do you convert? You can't take this dollar. Right? You can't just take this and convert it to gold. I mean, you can't do that. It can't have the same value. How can this dollar have the same as a dollar backed by gold equal the same value? There's no way. So I'm not sure. Well, unless they're not saying that in the story, I'll have to dig in a little bit more into Zimbabwe gold backed currency. So I wanted to show you that. So what's BRICS going to do? So you have rubles. You're going to just take your rubles and switch it to gold backed Russian currency or gold backed currency. Maybe that's why the U.S. is letting Zimbabwe do it, because they're still allowing the U.S. dollar there. But I don't get it. If you got the dollar, then what is this other Zimbabwe currency being inflated? Why are you using that? Why aren't you just using the dollar, which is totally inflated? Or it's bonds or something. It really, whoever wrote that did a horrible job, because I can't make head or tail. So I'll go look at that today, Zimbabwe, and try to figure out what the hell is going on with it. So anyway, so we talked a lot about the value, the dollar, the gold going up and why it won't go down, and silver yesterday. So let's just recap that in case you didn't catch the class. So gold's now at $2,326. That's the spot. Again, a fake spot, a paper spot, but a spot. We're trying to get to real value. So my point was, why would anybody sell gold? Because of the idea. So let's go economics 501. I don't go to 101. I go to master's class. So we have this dollar, and you print because the people in charge are MMT people who are Keynesians, who believe you can still run your debt as high as you want, and you can print this to pay for your debt. And they can't figure out that there's no consequences to just printing it. The Austrians go, you can't print it. You got to keep it scarce. You can't print and print and print. And then what do we hear from Bitcoin? Oh, wait, we only have 21 million, no more. So they know you can't print it. Even though it's not real money, they do have that they do understand if you print a lot, the value goes down. So as people are catching on, you realize that you're printing, this has no value. So as you realize that this has no value, you immediately go and say, well, then I don't want to hold it anymore. Because if I hold it, it's going to go down to zero. It's depreciating. It's losing its value. You keep printing it. You got 35 trillion in debt, which you got to pay interest on every quarter of $1 trillion. And that's going to keep going. You can't lower your interest rates because of the inflation. Inflation controls the interest rates, not the Fed. So you're going to have this. You're going to keep printing this. So this has no value. So you're going to yourself and saying, let's see, it has no value, and I got 100,000 of them. What do I do? In Zimbabwe, it looks like you would just switch your 100,000 into a gold back, but I find that impossible to believe. So what do? Do you think they're just going to switch it 1-to-1 when the gold back currency comes out or whatever happens? We'll see. My point is, we know this is going to zero because you keep printing it. If you keep printing it and you expand the supply, which is what the inflation is, then you get this to be worth zero, like the other 5,000 times monies went to zero because it wasn't backed by gold. So if you don't back your money by anything, it's worthless from the beginning. Then as you print it, it's still worthless. So right now it's worthless. Inflation's much more than 2 or 3%, but we really don't care. We look at it by money printed, not by prices, because prices don't work to do inflation. What do you mean, Howard? That's how they measure it. Well, because as I've explained, so 5 years ago, a 2-liter of Coke was 99 cents, and now it's $3. So there's that first jump to $3. But then if you're looking year over year, it's still $3 for the 2-liter of Coke. Oh, well, then the inflation stopped. Coke hasn't gone up anymore. Well, as I said, first of all, it has from the 99 cents to the $3. Secondly, the market won't allow it to go up anymore. I could mark Coke for $5, but nobody's buying it at $3. It's buy 2, get 1 free or something like that. So to move their inventory, they're giving you the freebie because they can't move it. So they can't raise the price because the market won't allow it, because we run on a free market, which says the supplies, it says law, supply creates demand. We go out and make money where the supply, we create the demand. We want Coke. And we determine the price of it. Nah, it's too high. We're not going to buy it. Yeah, okay, that's a good price. We'll buy it. And at $3, we're not going to buy it. So you can keep raising the price, but nobody's going to buy it. So you have to have incentives. I see that all the time. I was at my meat store the other day, meat grocery store, and broccoli was on sale for $2.99 a pound, which is still high, but that's what it's at. And you're looking at what the market will bear. So we really don't know. You can't really measure inflation by prices because you're not going to continually get the Coke going from $1 to $3 to $5 to $7 to $10 because the market will simply not bear it. They won't accept it. So in Say's law, we make the money. We then demand the Coke. But if you make it $10, we say no. We'll buy Pepsi or we'll buy 7-Up or whatever. We'll substitute. So as long as there's competition, you don't need to pay the extra money. Now, what happens to Coke? Well, wait a minute. Their costs went up, but there's two things you can do. You can raise the price on the product if the public will allow it. If the public won't allow it, then you start cutting your costs. So you either raise prices or cut costs, and 99 out of 100 cut costs. How do you cut costs? Well, you fire or lay off employees. Your electricity's gone up and your heat, so you can't do anything there. Probably the cost for your bottles and your labels and all that has gone up. So your only choice, if you can't raise your price, is to cut your cost by laying off people. But this goes back to the initial, why do you get in business? So the question of why do you get in business is, well, I get in business because my costs are $10 and I can sell it for $20. So you look at what the market's bearing, $20, and then you figure out how to create the product. Let's say it's a Canadian Club. Well, let's go to the Bellagio. So we go to the cup, right? We can sell it for 15. Our costs are 10. We'll make it. We'll make profit. It's Bellagio. There's demand for it. But now let's say here's all this inflation or money printing, and the value of the dollar's dropped. So now it takes me $15 to buy the goods and services I need to make the coat. Now, just because my costs went from 10 to 15 doesn't mean I can make the selling price go from 15 to 20. The market's very fickle. The market's in control. The individuals. This is what you need to understand with Austrian. That's why Austrian economics works and Keynesian doesn't. Keynesian wants to throw the market at you and say, well, we're going to sell it for this, and there won't be a lot of competition. And people just don't buy it or they substitute. But in Austrian economics, thanks to the competition, I won't stay at Bellagio. I'll stay at the Flamingo, or I'll stay, at another hotel. So with that in mind, Coca-Cola just can't raise their price from 3 to 5 because the market says, no, we won't pay that. So back to the Bellagio show, have your costs go up. So now it costs you $15 to make the mug because of all these little costs going up. You try to substitute away from the certain costs. Maybe you buy a different ingredient for the mug. Use copper instead of silver, something like that. So you try to substitute raw materials. Maybe you get labor from Mexico instead of the U.S. because the U.S. labor is too expensive. And that's really what started this whole China thing, was Ford and GM going, oh, well, we'll have cheaper labor there. But the problem they had is engineers aren't cheaper anywhere. I mean, as soon as the Chinese engineers understood they can make $100,000 and you started paying them $10,000, within a few months, it was up to 100 grand. And the quality wasn't as good because they're communists. They don't, they have no incentive. I worked in a union, and I'll get back at the grocery store, and I had zero incentive to show up because it didn't matter how fast I worked or how good my quality was, or if I could do some things fast and then do other things. So I could do 12 things during my stay wasn't going to get me a raise. Just showing up and working as slow as possible, because the raise was determined on length of time. You work here 90 days, you don't steal, you just shut up and do your job, you'll get a raise. So where's the incentive? There wasn't one. That's communism. So unions are like communism. You just show up, you get a raise. It doesn't matter if I put up 100 bottles of pop or 5 bottles of pop. They couldn't do anything. I mean, there was a minimum. Let's say I had to do 50, but I didn't have to do it was 100. And I couldn't do 5. So let's say I had to put up 50 bottles, 2 liters, right? So let's say I had to put up 50. I keep my job, but no incentive to do more, because if I did 200, then you're not giving me a raise because you can't, because it's based on time. So that's communism. That's China. Russia's not really communist from what I understand now. And the U.S. is heading communist because they don't want to work and they just want to earn their money. So you basically have a second. So in the free market, we determine everything. So there's competition because I might like Bellagio, you might like Caesars, somebody else might like Venetian. So anyway, so your costs are now $15. You're trying to sell the mug for $15. But since your costs are 15, would you have gone into business? Right? If your market price is $15 and initially it only cost you 10, you made $5, you made 50% every time you sold one. So it was worth it. But now if if the price is 15 and your costs are 15, would you enter the market? No. So a real prudent guy, companies run by Austrian economists, would basically close up shop, because at the end of the day, there's no profit to be made. Oh, I can lay off 5 or 6 employees. So does that mean I had to start with? So I lay off 5 employees, which cuts my costs from $15 to $13. So now I'm making $2. I got a scared workforce. So they don't know if they're going to have a job. Are my benefits going up? My health care, well, that's probably going up. So I got to cut that out. So how do I cut cost so I can still sell it for 15 and my costs be lower, right? But when my costs were 10, it made sense to do it. But if my costs are 15, but I can't raise my price to 20, right? I can't raise this to $20. It just doesn't, the market won't allow it, right? I can only sell it what the market will allow. So if the market will not allow me to raise the price to 20, I can't raise the price to 20. So now I'm stuck at cost are 15 and my selling price is 15. I got to leave. Sorry, I'll go look for something else where I can make money at. And that's really it for what's happening now with inflation. So when they measure inflation, so that's the problem with it, right? Your costs go up, but you can't raise the price. So your alternative is to try to find different materials and or get rid of employees, cut employees, because you have no other cost. You can't cut rent. Well, maybe you can, but if you're making something, it's not easy. You're manufacturing. You need tools and equipment, right? If you are, maybe you can outsource everything if you weren't already. But they're going to raise the price because their electricity went up and their rent went up. So they're going to charge you more. That's where they get you. Maybe you can find another guy to produce it, outsourcing it. But at the end of the day, so your costs go to 15. How do you make money? And if you can't, see, that's what I'm saying. They think the magic is to raise the price, but all that happens is people don't buy it. Oh, you want to charge me 25 for this mug that I paid 15 for? No. So you won't pay more for it. You'll either go without it or you'll go to you go to Walmart, just get a regular cup. Or, you do other things, right? There's substitutions. Instead of getting a New York strip for 20, I get a sirloin for 10. Something like that. That's what happens. And, like salmon's very expensive. It's $15 for a pound. So screw that. And I get more chicken, which is still $2.99 a pound. And I get hamburger, which is still, usually I can get it for $5 a pound. And occasionally some, New York steak or New York sirloin or whatever for that. And so I then switch. So that's how I play the game. I switch to what's on sale. If that's too expensive, even when I go to the meat store, it's called Bush's grocery store. When I go there, all the fruit and veggies are very expensive, much more than at Meijer or Walmart. So what do? Is I just do my meat there. And then I go to the Meijers and get all my fruits and vegetables far cheaper. And it's close to my house, so it's not a big deal. I'm driving by it anyway because I come back from the pool. So I go to that Bush's, and then I go up, and there's Meijers, and if I need, but I'm pretty like once a week I'll get meat, and once a week usually I'll get veggies. Although sometimes I'll need peppers or, I'm out of lettuce, so I need to get that. But generally that's how it works. And if something's on sale, I'll buy more of it. Like when hamburger is on sale for $4.99, I buy like 6 pounds of it because I'm going to cook 3 at a time, and I'm going to cook, and I know I'm going to cook it, within a couple of weeks. So I get it while it's on sale. I probably should go there today. They had these steaks on sale for $4.99. They're the sirloin steaks. They're not as good as a New York strip or whatever. Anyway, so as a shopper, you want the competition. You want to be able to substitute. Salmon's too expensive. I get chicken. Okay, you substitute it. From a business standpoint, you need to substitute also. Well, I got to change vendors because I outsourced the Bellagio cup. I'm going to change vendors who makes it. So I'm going to get some quotes. People that need the business will come down, even though there's inflation. So inflation's really the increase in the money supply. It's got nothing to do with prices. And then the way the government does it, they lie to you anyway, where they sit there and they go, well, we're not going to count something that went up a lot, right? Well, let's not count food in the inflation figure, or gas in the inflation, or energy in the, or rent in the inflation. So all the things that have gone up, they don't count. So they only count a select few things and say, look, it's 2%. Are they printing money? Yes. That's the bottom line. You're printing $21 trillion and another 130 trillion outside. Yeah, forget it. Probably Daria. Just a second. Just a second. All right, sorry about that. So that was just we're trying to confirm our trip. She says, "Well, I can't do it till July because I can't leave my daughter alone and my mother planning on July 4th." I said, "That's fine. Just before August. August gets really hot and really expensive to go to Europe, but July should be okay, especially early July." Anyway, so with that said, so you have everything is done by the central bank. All our problems, the wars, the money, people going broke in 2008, everything is the government's fault because they control and have the monopoly on the money. And if we have gold, they can't screw it up, right? They can't print more gold because you can't print it. You have to get it out of the ground. That's the beauty of gold. It kind of gets the government out of the way. That's why they don't like it, because they want to be in charge and ruin everything because they don't know what they're doing. And then they can blame something and say, look, you need us because look what happened. We got inflation. So you need us. You're the cause of the inflation because you printed the money, because you did all this bullshit with the rest of the world where they can't, the Swiss can't just go to Germany and buy euros. They need dollars. So we had to print all these dollars, but now nobody wants to pay for it because the Chinese and the Japanese are not buying treasuries anymore. And we're stuck with all this debt and nobody will buy it. And that's the end of it because of the Federal Reserve printing the money like that and then not even understanding. So we know that's going to happen. So let's finish up with Bellagio. So because of the inflation, so they just go into business and it's gold standard. The costs are 10, they sell it for 15. That's it. There's nothing else to really look at, right? It's 10, it's 15, that's it. That's the bottom line. And if you're on gold, the $10 would never move. In fact, you might be able to get it down to $9 or $8 as more people got into the markets. And because you would know exactly what you're going to make. It's cost 10, sell price for 15. Everybody's stable on gold and no problem. But when the government gets involved and they print the money, and somehow they don't know, are they all this stupid that they are all MMTs and they all think they can just keep printing money to pay for the debt? So they're going to run up this debt. So it's sort of like, I'm going to go on a vacation to Hawaii and I'm going to stay there 5 months. And I'll just print money to pay it off. Okay, so so they all don't understand that the more MMT, so you want to go to Hawaii for 5 months and you run up a $30,000 credit card. And you think, you know what, I'm just going to print money. I'll just get money out of thin air. I'll go to my money tree outside and I'll pay for the vacation. And there'll be no problem with me printing this money. And that's the problem. So the MMT runs up debts, the government. And then they think, well, all right, we got 35 trillion in debt. We'll just print $35 trillion. And it's probably what they're trying to do with the treasury bills. I think that's how they pay for the debt. I'm not 100% sure, but I'm starting to understand that part of it. Is they do the T-bills and sell them to China and Japan and all these countries to pay for the debt, pay for the trip. But China and Japan saying, no, we don't want to, because you got so much debt, we doubt you're going to be able to pay us back. So therefore, why would we want to do that? So now all they do is they buy their own debt. Well, what does that mean? Wait a minute. So I went to Hawaii, put up 30,000, and now I'm gonna what? Empty my bank account to pay it. How's that gonna help me? I thought I could just take it off the money tree. So you have 30,000. So now you've got this $35 trillion that you think you're just gonna print to pay off the debt. The problem is, as you print these T-bills, the value of the dollar drops. Now you've printed, so even when you print $1 trillion a quarter to pay the interest, the value of the dollar drops because there's too much supply. Inflation is inflating the money supply. That's all it is. You print too much money, it's worthless, right? It's like eating 20 pieces of cake. You're probably going to gain weight. You're probably going to get sick. So it's the same thing. You're going to have one slice and you're okay every, once a week, but not every day. So that's fine. So the point being that the central banks are the ones printing the money, and it's the only money we can use. And we force everybody to use the US dollar on this idiotic, well, I'm Switzerland, I need a dollar to go buy the euro. So I got to buy dollars, sell the dollars to get why can't I just go from Switzerland to Germany and just go to the euro? That's what I do, but I got the US dollar. So I don't need to do the switcheroo. So it's created a lot of printing of the money, which it's worthless. It's basically worthless. And that's why I'm surprised Zimbabwe is still something's up. Like, why are they still using the US dollar? That's the point of the gold standard or the gold backed currency. The idea of the gold backed currency is you don't need anything else. You got gold, which is king. Maybe it's a ploy, a political ploy, because the US is going to kill them if they don't or something. I don't know. The US is such criminals. It's really upsetting to live here. So with that said, understanding those concepts, we realize and we can see M2 is the money supply is 20, let's call it 21 trillion, and 130 trillion outside for all these little Switzerland to Germany transactions and all over the world. So somehow it's all screwed up. So how do you break the monopoly is with competition. How do we get competition? When there's a bully in charge. So the bully, the US, Gaddafi and Saddam Hussein tried to come out with a gold-backed currency to compete, and the US killed them both. Nice guys. That's why I'm surprised they haven't killed the Zimbabwe guy. I think as long as he keeps using the US dollar, they will let him live, my guess. But now we've got our own bullies. We got the Russians and the Chinese and the Indians who are now saying, we're going to have a gold-backed currency. We're going to have this BRICS currency. So they unite to get strong enough to not let the US dictate. And they're going to go and come out with the gold-backed currency to compete with the US dollar. Wink, wink. But we know that'll destroy it because we know gold is limited. And gold cannot be printed. That's why it survived, and that's why it's limited. It's the only thing that can't be printed. I don't know why they call it counterparty risk. That's bank talk. Those are not economists. Economists would say it can't be printed. I can't print gold, so it's limited, and it has to be limited. Therefore, goody for us, since they can't print it. Gold will always keep a big value, especially over something that's $150 trillion out there. That leads us to then realizing MMT says, go ahead and print money. And that's how the governments are run by Keynesians, would say it's okay to print. They're communist. And so they're telling them this is the problem. That's the iceberg. So to compare it to the Titanic, the MMT is the iceberg. We're done. We've basically, you can't print anymore. It's worthless. So like on the Titanic, you've hit the iceberg, the water's coming in, the ship's going to sink. I got to get out of that. And so I go to a lifeboat. So let's compare the correlation. I've got MMT printing money. That's the iceberg. The money has no value because I've printed too much. I've eaten too much cake. And with that problem, the water's running in, and so the money's worthless. So you're looking for a lifeboat, right? You're looking for a way off. I got to get out of the dollar. It has no value. It's going to zero. I either hold my 100, 200, 500 grand, or I get out of it. So, you're in a speeding car and you're going to run into a train. You either run into the train or you get out of the car. So the same thing's here. I either stay in the dollar, watch it go to zero, and I lose my life savings and I lose my worth and I'm screwed, or I get out of it. So we've determined Well, how do you get out of it? Well, you got to find an asset that has value, but not necessarily an investment, but it could be both, which we found. So if you go into the stock market, you're still in the money because the stock market is still controlled by this, and we know there's 150 trillion of these. So it's still going to go to zero, and it's going to take everything down with it. So it takes your stocks, it takes your banks. So if you got real estate trusts or annuities or CDs, they're all worthless because the dollar will go to zero, like was talking about with the Zimbabwe dollar being basically worthless. So they came out with a gold backed dollar, but I still don't understand it. And they're still going to use the US dollar. So probably what happens. So, in other words, why do you want it? So, you've got to get off the Titanic. You've got to get out of money. You've got to get out of this stocks, bonds, real estate trusts, anything to do with a bank or Wall Street, you have to get out of because it's all collapsing because they're printing 180 or 150 trillion dollars, and the more you print, the less there's no value left. So what do? Well, we look around for assets that are not money, that are not stocks, that are not bonds, that are not bank instruments like real estate trusts or annuities or anything to do with paper because the paper's worthless. So we got to get out of the paper. And we find Rolex and we find Mantle cards and we find gold and silver. Gold and silver we love because they can't print it. The Mahomes card and the Mantle cards we love because they can't print it anymore, especially if it's like this is 50 count, so they only made 50, so therefore they can't print more to lose the value. And the other thing is, who was doing that with me yesterday? Sorry, I can't think of your name. I keep wanting to say Bob, but that wasn't right. Anyway, so I was given a price of $50 for the youth, but you've got to realize this is the gold. This is the 50 count. So the regular base card looks exactly the same. That's probably the $50 card. Yeah, it's probably not even 50. But the 50 count, yeah, maybe it is 50, but that's ungraded. And as we know, ungraded Montana cards 250, the PSA 10's 125,000. So we don't really care about the ungraded. But the point is, you look for things to get into. And so you get into, that's where we found gold and silver. And you go, how about Bitcoin? Well, Bitcoin is still paper because how is Bitcoin priced? In dollars. So Bitcoin's priced in dollars. It really, when the dollar goes out, Bitcoin will have no price. Plus, Bitcoin's not backed by gold either. So Bitcoin is essentially worthless. And yeah, I know people can bid up, you know, computers, I guess, to 60,000, but really it's worthless. It doesn't have a value. You're not buying an asset in a Bitcoin. You're not buying like this. This is an asset, so I can buy it and hold it. I can't hold a Bitcoin. So it really has no value. It's not backed by anything. So it comes to gold and silver. So I get out of money, which I know is going to be worthless because I know the printing presses were on making the value zero. And it's coming. And if you don't believe it, I think there was 500 or 5,000 currencies since the Roman time that have all gone to zero because they weren't backed by gold. So any currency not backed by gold going to zero. Look at Venezuela now. Look at Zimbabwe now. The non-gold backed stuff. Look at Brazil, Sri Lanka, Greece. They all inflated. They all went to zero. So if you don't think it can happen, you got 10 examples of it happening now. Russia and China are hurting, but they're okay, and they got all the gold. So you ask yourself two questions. Well, why gold? Well, it's very limited. You can't print it. It's very much in demand, and its value will hold because they can't print it. So they can't, make a lot of. They can't print 20 trillion like they can here in gold. Gold, that's it. It's all it is. So then you look at what's going on in the world. Well, all the banks are buying gold. All the central banks in all the countries, but the US and probably England, are buying gold because they know the dollar's worthless. So we don't know anything, but we can see what's happening, right? We can see all the central banks buying gold. Why are they buying gold? So just be logical and saying, well, wait, they're dumping their dollars to buy gold. That's why I show you Egon and Alligator and Mark McGuire. So they're telling you, oh, this is what's happening. So we can go, oh, okay, because I don't know everything in the world that's happening, but that's how I learned by those guys. And then I value and judge if they have a brain or they're idiots. So why are they all buying gold? Why does Putin have 30,000 tons of it? Why does China have 60,000 tons of it? India's got it. I don't know how many tons, let's say 10 tons. So the banks and the countries are buying gold because they know you can't print it. It can't lose its value. Or importantly, the dollar's going out. Why is BRICS coming out with a gold-backed currency? Well, it's very easy because who's going to really trust them, right? Russia, China, India. You don't trust any of them, but you trust gold because you know you can't print it. So the Russians or the Chinese can't sit in the back printing more gold up. You can't. So therefore, they go to a gold-backed currency to have all this trade, and that'll get rid of the US dollar. So that's why we own gold. Now, the next step is, so we bought gold at 1,800 and it's now 2326, which means I can sell it on eBay for 24, add $7,500 to it. So your thought is I'll profit take. I bought it for 1,700. Maybe like this, I bought this for $500 when gold was 250 an ounce. Now, I could do what half these guys do and say, oh, I bought Bitcoin at $5 and now it's 60. Look at how much I made. I could do the same thing. I bought this at 500. Look at how much I made, but I don't. It's infantile. Yeah, I wish I had bought 1,000 ounces at 250 and then I'd be, I'd have made a lot of money, but it's okay. I still got my cards. You can't go back, so you got to stay stoic and go, okay, but what can we do now? And we can keep buying gold. So we keep buying gold because we don't want to profit take it because that's not the purpose of it. It's not a stock. So if you bought Microsoft at 100, went to 150, then it starts going down, then you might profit take it. Okay, that makes sense. But what are you going to do with the money? Well, the money will be sound because it's still US dollars or you put it in another stock in a normal situation. Now it's not a normal time. So what you have is if I sell my gold, I get back into the Titanic, which I just got out of. Titanic sinking, I get out of the Titanic into the lifeboat. As this is the Titanic sinking and I bought gold to get off the ship, why would I sell my gold to get back on the Titanic? You got to be out of your mind. I just got off the Titanic. I had to pay one of those guards $100 back in 1913 or whatever to get onto the lifeboat. Why would I get off the lifeboat, go back on the ship? That's what people need to understand. I am not looking at profit taking or selling my gold because the alternative is I get back in the dollars, which I don't want. So I'm really shoving the I'm shoving I'm getting out of that dollar, buying gold. So the last thing I want to do is sell the gold to get back into the dollar. So I don't look at it as profit taking. I look at it as I made a smart investment and I'm just going to keep, I'm out of the dollar. So I just look at it like I'm out of the dollar. That's it. Bottom line, I'm out of the dollar. Wonderful. I got gold and it's going up in price. Beautiful. Now I go to the next phase. Why would the gold price go down? Well, before comex, which is JP Morgan, and it's all fixed, price fixed, would do what's called a derivative, which is you're betting the price goes down. So they would bet the price to go down and they manipulated it so somebody else would buy it. No gold was needed, no physical gold. It was all paper gold. And then the price would go down. And that's why everybody's frustrated with gold. Oh, because they don't understand paper gold, physical gold. They don't understand comex and JP Morgan would do this. So they said, well, I buy gold. It doesn't do anything. Okay. But now they're gone. There is no more price fixing. JP Morgan didn't have physical and they changed the rules. They said it's now first tier asset, which means it's the same as a T-bill, same as money. And then they said Basel III says if you do a derivative and somebody buys it, you have to give them the gold. Well, they don't have the gold. JP Morgan doesn't have the gold. So JP Morgan is getting their ass kicked because China and India are buying the gold that as they do the derivative to keep the price down, they're buying it. Well, they don't have the gold to do it with. So they've been caught with their pants down. So JP Morgan left and now they're going to go screw around with Bitcoin. They see the better opportunity in Bitcoin because there's no physical at all. That's the biggest Ponzi scheme because there is nothing there. There is no physical. It's not backed by anything. It's just there, right? So they're over there and they're fine because they'll never have to come up with physical. But now the people that were keeping the gold price down, JP Morgan, comex, London, are out of that game. They're still in silver a little bit, but they're going to leave that too because the demand for silver is so high because people want to buy the silver to get out of the dollar and before the price goes up. So the silver's also going to be, but not quite yet, but gold is. So now that there's no derivatives knocking the price down, now it's just going up. And you can see really since March 1st, it's just boom, 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 boom. And it's gone from 2050 to 2326. And in the last 2 weeks, it just, there'll be one day where it kind of goes down and then boom, 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 because the demand for gold is huge. And as we learned from our Austrian economics, if you demand a product and there's more demand than there's supply, the price goes up. So there's only 50 Mahomes cards. If you got 100 people wanting it, the price has to go up because after the first 50 got it, the next 50 want it. So they're going to have to pay more. Sort of like with Super Bowl tickets or All-Star game or, just tickets. That's why they sell a lot more on the secondary market because as they're bought out, now I want it. Well, wait a minute, I pay, maybe when it comes out at the box office, they're $500. Okay, I paid $500 for it. Oh, you want it? Well, I paid $500, so you're going to pay $1,000. And you pay $1,000 because you want the ticket. So you're going to pay more for the gold because you want the gold or the Mahomes card, right? You're going to pay more for it. So again, why am I? It's all going to be people buying the gold because there's huge demand from the central banks, Russia, China, and India. But who's selling? So everybody wants it, but there's nobody who are price fixing it anymore. There's no derivatives knocking the price down. So now it's just up, up, up. And you have huge demand for silver and gold. for money, silver also has a double demand for manufacturing. And there's like, I think 600,000 tons of silver, 250,000 tons of gold. Now, with gold, you can't hurt it. It's indestructible. Silver runs out, right? Silver goes. So of the 600, how much is left? Of the gold, I think just about all of it is gone. So there's not like a little warehouse with, 20,000 tons of gold sitting there that nobody's bought. It's all been bought. So all that's happening now is I go to the coin store and he has gold because somebody came in and sold it, and I buy it like I did Friday. I bought somebody else's gold basically, who took it to the store because he doesn't. The best thing is we got him on the phone, and I said, okay, I'll give you, what's he going to give you? Spot? I'll give you 20 over spot. That way I buy it cheaper and you get more than he's going to give you. So we both win. That's free trade. So again, there's no mechanism to drive the price down if we have huge demand. So basically, and the banks know this better, as this is going to zero, and it's probably already there, as we keep printing it, because the MMT boys, the Keynesians, sit there and go, well, that's okay. You can pay for your debt by printing, and there'll be no repercussions and no consequences. And you're like, excuse me? Yes, if you keep printing, this goes to zero. That's the problem. So they don't understand what they're doing. They're a bunch of idiots in charge because MMT Keynesians have been proven wrong. And us Austrians know, well, you keep printing it, it's not going to have a value. So we're buying gold. They're printing it, and they're going to print it to nothing. So the banks realize this, and China and India realize this. So everybody realizes, get out of the US dollar. Nobody's buying the treasuries anymore, which is how they're printing the money. So we're printing treasuries and buying the treasuries. That makes a lot of sense. So it's creating more and more money printing, which creates less value for the dollar. So we all realize that. So we go, let's buy gold. So as the spot isn't going anywhere because it's going to be, it's going to have buying, but why would you sell it? If you sell it, you're back in the Titanic, which is not what you want to do. So that's really the point. You don't want to sell. You don't want to sell the gold to get back into the dollar, even though it's gone up $400 or $500 lately. Well, let's say I remember it was like 1970 a month or 2 months ago. And so now it's 23. So it's gone up $350. But that isn't why you bought it. You bought it to get out of the dollar. You didn't buy it to make money on it. It's really not bought to make money. It's bought for protection. So when the dollar goes out, the gold's there. But it's an asset like a Rolex. So I don't like when people say, well, it's only good when the dollar's bad. No, it's an asset just like any other asset. And if COMEX wasn't price fixing it since 1973, the price would be $50,000, $60,000 for gold. So we got lucky in the fact that the prices stayed low for us to buy it. Silver you can buy. I could have bought it at $29.90 Friday. What's it doing there? That's ridiculous. Gold's starting to go. It's $23.29. I paid $2,400 for my ounce on Friday. So it's starting to move. However, it's still cheap, right? It's still way, way undervalued. So gold at this price, to me, why would I sell it? There's no reason to sell it unless I needed medical or pay an expense or eat. I mean, if you got to do it for that, you got to do it. But just to do it for profit taking makes no sense. So for the little of the gold being sold for that is really not going to knock COMEX price down. So at 23.26, you've got a huge demand to buy it because they're still decoupling from the dollar, right? It's just starting. So everybody's realizing is getting out of the dollar. Well, that's in the beginning. So you still have a lot of people wanting gold. And the more the price real goes up, people will realize, oh shit, gold is what I want to do. Why is it moving? Right? They'll start asking that question. Gold's at 4,000. Oh shit. So because gold's at 4,000, but you're still going to profit take. No, I mean, unless you need to sell it for a bill or an expense, you don't want to, you're not looking to buy the gold to profit take. You're looking at it to get out of the dollar. So you stay out of the dollar and you stay in gold. And because the value goes up, it's not a profit taking instrument. You're not buying it to profit take. However, the price is going up. And I do argue with Alligator and Egon. Normally, you're right. It's not the gold going up. It's the value of the dollar going down. However, the value of the dollar has dropped so much since 1971, but the price of gold hasn't. So the price of gold still has to recover from all the dollars being printed, but the gold not allowed to do anything. The gold is much, much higher, easily 20,000 an ounce. Because it's got to catch up with all the money printing that you're suggesting. However, I also believe it's a demand. If there's more than 50 people for the Mahomes card, that's demand raising the price. And I feel that that's what's happening with gold. It's demand raising the price. It's everybody getting out of the dollar going into gold would raise the price also. And that's what they're missing. So what they're saying is, as they print the dollar loses value. So the more dollars you need to buy something, like an ounce of gold, which is true, but it's also the demand. It's a double hit for gold. It's, yes, you need more dollars to buy it if it's in fact allowed to be free market, but also because of everybody running in and there's not that much gold. It's like the tickets to the Super Bowl, the price goes up, and that's what's happening. So there's no reason to sell your gold. You're not profit taking, because if you get back into the Titanic, you're going to go to the bottom of the ocean. So there's no point in selling the gold to get back on the Titanic, right? So you're not selling it to get into stocks. You're not selling it for treasuries or anything. There's no point in getting back into the banks or getting back into Wall Street. You're trying to get away from them. You're not trying to, like, you bought the gold to get out of that whole mess, right? All that Ponzi scheme, the banks, the Wall Street Ponzi scheme. So you're getting out of the Ponzi scheme, and then you're in gold, but there's nowhere to go with it, right? Yeah, you can buy a Rolex with it. Okay. If you want to diversify, but basically you're in gold, but you're not in gold to get out of gold. You're in gold to stay in gold. So as people realize the dollar is worthless and pushing the price up, and nobody's there to push the price down, the price should just keep skyrocketing. So my thought is we'll see 2,500 probably at the end of this week, and then we'll go to 3,000, in a couple of weeks. Then the BRICS announcement on May 14th will be gold-backed currency, and we'll see how that plays out. Is it going to be like Zimbabwe? They're still going to use the U.S. dollar. I think that's the whole point of the BRICS, is to not use the U.S. dollar. So I'd be surprised if they did. But they're big enough not to be bullied by the U.S., Russia, China, India. Now they still want to do business with us. However, we really don't have money. So they do business with us because we're the bully. We have the dollar, which really doesn't have value, and we threaten everybody. But our military is getting hammered all over, and we don't have much of a military. listening to Colonel McGregor. If he's accurate, I don't know. He comes across accurate, but let's ask the question, is he really accurate? So you have that. So that's why in comex I'm saying it's not really what you don't really, nobody's really going to sell. So I don't see why the price would just not go, just go up, 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 because there's no derivatives anymore by JP Morgan to lower the price. The demand is huge for gold and silver. So I don't see why the price of gold doesn't go $30, $40 every day, because everybody wants it. Is the profit taking, like, I can't see central banks selling 400-ounce bars of gold to get money, right? So I don't see them selling it. If I take an ounce and go sell it at the store, that ain't going to touch the price. So the bigger hitters who are doing it, or whatever's moving the price from demand, will keep going. People will keep buying gold because once they realize to get out of the dollar, but there's no reason to sell the gold to get back into the dollar. Like I said, unless it's medical or you got to pay some bills and you just don't have any money. It'll probably be more reactive if they cut Social Security or things like that people are relying on, that at least pays their rent and their food and stuff. Then they would need gold if they have it. I don't know how many people really are sitting on gold who are using that. They probably sold it all. Like when I saw in Alabama, this poor old lady goes into this coin store with her silver, and the guy screws her and doesn't, it gives her 75% a spot at $23. So she got like $20 an ounce for it. What an asshole. So basically, the poor lady, but you can see she needed the money. So she was selling all her silver. She obviously had no gold, or she would have sold that. I wish I would have been able to talk to her. I would have pulled her aside and said, I'll pay you spot for it. He's not going to give you spot. I'll pay you spot. She's happier. I'm happy. I wouldn't have bought the silverware, but the coins I would have bought. So that's my theory on what should be happening with the gold price. There's no reason for it to go down, because if you sell it, you go back on the Titanic. And this is the Titanic. And we know it's because they keep printing the money. So to get into that, that's the point, right? So that's what you're getting. You're trying to get out of. So why would you want to get back into it? So therefore, you're not selling your gold or your silver, and then you're just waiting for the price to go up. And so I went to the barbecue place, and the guy says to me, so when gold hits 10,000, then what do we do? Still not understanding what he's got his teeth into. And I says, you wait till it goes to 20,000. I says, see, the problem is I got to then explain the dollar. He says, well, you don't want to get back into the dollar. That's worthless. So what's your option? So you have gold that's going up in value. What did you do when your house went up in value from 150 to 200,000? Did you sell it? You profit taking your house? No, you're going, this is great. I'm making money on it, but I'm not selling it. And that's exactly what you do here. You're making money on the gold. It's a very good investment. It's a very good asset. If it didn't have the price fixing, it would be much higher. And it's really got no relation to the dollar at all. It's a separate entity. It's like the Bears and the Packers. One has nothing to do with the other, right? So the fact the dollar is falling apart or in good shape, the only way the dollar can be in good shape is if it's backed by gold. If it's not backed by gold, it's going to go to zero 100% of the time. And that's the bottom line. So that's what I'm trying to get to, is you shouldn't be profit taking your gold. There's no reason to, because then you got to get back into the dollar, which is the whole point of buying the gold in the first place, to get out of the dollar. So I don't know what Zimbabwe and all these countries are going to do who use the dollar. Argentina, Brazil, Venezuela, all these countries. Argentina should be in BRICS, but they're staying with the US dollar. Now, I think there's corruption going on there, and pressuring the guy. He's supposedly a libertarian who's very much into free market. the first thing you would know is you need a sound dollar, and then he's using the US dollar. So here, the US dollar is worthless, but we don't have any gold. What are we going to use for medium of exchange? Now, my thought is we'll use the BRICS gold backed currency for medium of exchange, right? Because it's neutral and it's not any country. So why can't anybody use it? And that's really my point. Because if we don't have gold, there's no alternative. We can't print another dollar that's not backed by anything. It's worthless. Bitcoin is not backed by anything, and it's not accepted everywhere. Most places don't want it. I don't want it. I don't trust it. Oh, I'll go in and the site's down. Oh, I just lost all my money. Well, that can't happen if I got gold, right? And you can get Greg and John said that yesterday or the day before. He says, I can't get to my account. Suspicious activity. They close my account and they close my debit card. So this is a bank doing it. What do you think is going to happen with Bitcoin? You don't even know what it is. You don't even know if it's real. All you know is you have some sort of code and you have some amount in there, which is real or not. Probably not real. Who has this money? So let's say you got one coin that's worth $60,000. Who has that? Who's holding it? So you go and you say, okay, I want to sell my Bitcoin because I want to buy gold. Well, how do you know it's even there? Okay, you dump it, you get it. And what do you do with it? Well, I got to transfer it to my bank. Well, maybe you can buy gold with it. I don't know. If you could, I would. But at what value? We don't know the value. It's moving all over the place. And then I love how people say, well, it's as good as gold. No, it's not close to gold. We know what gold is. We don't know what Bitcoin is. So I would heavily advise away from Bitcoin because we don't even know what it is. We don't even know if it's real. There is no coins physically. So it's all digital. It's all on the computer. So you're taking a huge risk, maybe not for a reward. And so the price moves. It's all a Ponzi scheme. And then you want to get smart enough to sell it, but most people don't. They just hold it and it's going to go to 1 million, so I'm going to hold it. And then eventually somebody, the government or somebody will come in and say, no, you don't get anything. I was asked on my tax return, do I have cryptocurrency or Bitcoin? I said, hell no. Now they're trying to collect the data and they'll know who has it. And why are they doing that? And then why are there ETFs? That's a problem. So you really are trying to keep it simple. Keep it simple, stupid. Buy your gold. Just hold on to it. You don't want to get back onto the Titanic. You don't want to get back into a Ponzi scheme like Bitcoin. You don't want to get into a Madoff. You don't want to get into a real estate trust, attack on Wall Street guy. So really, you're best in just holding your gold, putting it in a safe place, not worrying about it, and watching the price go up. Why is that so difficult for people to grasp? No, I'm going to keep my 200,000 in the bank and hold on to it because the bank won't fail. Really? Okay. You heard of Credit Suisse that failed? Yeah. Okay. So the bank certainly could fail and probably will fail because they're all related on the dollar, which is the Ponzi scheme. They print the dollar out of thin air. The banks are the ones causing the increase of money supply, not the government. It's not fiat money. It's the bank money that they just print out of thin air is the problem. So anyway, so that's what's going on with that. So we covered comex. They're out of the gold. There's still a little bit into the silver. There's a ton of orders that are not being filled with silver where people want, 2,000 tons of silver. They're not filling those orders. They're going to start going to the mines and totally blow up comex. And then we'll get a real physical price of silver. which is a hell of a lot more than $27 or $29 or whatever. I think it's $27.50, and I could have got it for $29.90, and I didn't get any. I rather got the gold ounce. When it comes to that, you can't go wrong buying either because they're both real money and they both can't be printed. Anything dug out of the ground can't be printed. You got to be careful with diamonds because they can manufacture diamonds. They can't manufacture gold, but they can manufacture diamonds. You got to be careful if it's De Beers or it's a competitor and it's fake. It's machine made, not coming out of the ground. So be careful with diamonds. It's not, I don't think it's, I'd rather have gold than diamonds if you have this, because gold's money. Diamonds, what do you got to do? Take it to a jeweler and he'll inspect it and, just to know what it is. So what do you want to go sell? So, but if I go in with gold, it's here you go. And here's your money and off you go. And gold's just begun to go up. Some of these baseball cards you can get into our assets, like the Montana rookie I show you for 100 and a quarter. Problem with it is it's 100 and a quarter. Let's say it's 100, right? But so it's already jumped to 100. Gold's still sitting at that low price, gonna jump hopefully to 100. But see, that's the difference. Montana's already jumped. So what do you got left in the Montana? Is it going to go to 200? Where gold's still sitting there at this cheap price of 2,300 going up, but people don't realize it's cheap. So that's what you got. So we've hit COMEX, the BRICS meeting, gold-backed currency. It's really competing with the dollar, but who the hell is going to stay in the dollar? Nobody wants the dollar now. Nobody's buying the treasuries. We buy our own treasuries. What the hell is that about? So that's like me running an auction on the Mahomes card, and then I buy it because nobody will buy them, which shows you there's no demand for the U.S. dollar. There's too many out there. Nobody trusts that it's going to get paid back. So if you're buying a T-bill, for example, it's an IOU. I'm going to give you $1,000. You're going to give me 5% interest for 5 years, and then I'll get my $1,000 back. Well, nobody believes that they're going to get their $1,000 back because we're broke. We got 35 trillion in debt. Who are we paying first? So you think you're going to get your money on your T-bill? And it's going to be inflated money because they keep printing and printing and printing. So the money you're going to get doesn't have the value of the money you gave them. That's why interest rates will not go down, because if you're going to loan money and get back inflated dollars, you need to get more dollars than you lent out. So I gave you 10 grand. I'm not doing it for charity. So if you give me 10 grand back in 3 years, I'm only getting value of about 6. So I got to charge interest to get the 12,000 back that I lent you 10. I want to make 2 grand on. So that's what's happening. What else? So that's BRICS. Again, there's more countries joining it. More countries want to join it. This meeting is in Kazan, Russia. Russia controls it now. With this stupid war, believe me, Russia has got nothing better to do than come out with gold-backed currency. And he knows what will happen to the dollar. He knows the dollar has no value. They want to get gold for oil. So as you can see from the Zimbabwe notes, I'll show you again. So what Zimbabwe is doing, this is what the Zimbabwe gold-backed currency looks like, right? So that's all it'll be. It's called a ZIG, so it's like Zimbabwe gold dollar. I think maybe the middle is where the gold something, like it should say Reserve Bank of Zimbabwe. It should say something about gold on it. Anyway, So that's what we know. Um, so now you can see it happening. So ask yourself, well, why is Zimbabwe coming out with a gold back? Because their Zimbabwe dollar is worthless. Their inflation's 500%, which means it's much, much higher. Because if they're looking at prices year to year, so a Coke was $3, is now $6. We know their inflation's much, much higher. So their dollar really has no value, right? You can toilet paper or you can wallpaper your house with the Zimbabwe dollar, which is what you're going to be doing with this. You just don't understand or believe it. Well, how can the US dollar fall? Because these idiots are printing it to death and they got this huge debt that they got to pay. You can't just ignore it because we got to pay other countries, right? As I said, these are all treasury bills. So people have been buying them to get and then need to get repaid. Well, you can't just ignore $35 trillion you owe China and Russia and Spain and Germany and all these Japan, all these countries. You got to pay them back. So that's the thing. Oh, they'll just not pay the debt. They just won't pay it. Yeah, they might do that, but then how are they going to lend? How are they going to, if the system is based on creating T-bills to pay for my debt and somebody buys them and then I don't pay anybody. So it blows up and I said, screw it, I'm not paying anybody. Well, who's going to buy your debt then? So the whole system is fractured because the system's based on people buying the T-bills, which basically pays for the debt. Well, nobody's going to pay for it. China and Japan realize we have no money because they're selling these T-bills because they know they're not going to be able to collect them. So the U.S. is sitting there with the biggest bunch of idiots running the banks and the financials and printing money without understanding there's consequences. Being an Austrian economist, I, of course, understand the consequences of printing too much money is the inflation, and it does make the dollar go to zero. But how many of me are out there? Not a lot because they don't teach it anymore. So it's more Keynesian economics, and the Keynesians and the MMT people, modern monetary theory, believe in that's okay. We'll just print more and more and more, and nothing will happen. These people are out of their freaking minds. They probably are the ones that eat a piece of cake every day and wonder why they get fat. I mean, it's the same thing. So they don't really get what's happening. Comex is blowing up because the demand, because they printed the dollar to nothing. So the demand for gold is through the roof and it blows up Comex because they don't really want to deal in physical gold. So you can see what's happening because the Keynesians are in charge, which has already been proven, or they don't know what they're doing. And Keynes himself was responsible for the Great Depression in the 1930s. He was FDR's guy, and he screwed everybody. And that's why you did all these roads and the dams and all railroads was a way to stimulate the economy. Well, because the problem is the government can't just print money and do construction jobs to save the economy. The economy is based on Say's law. I go to work, I get a paycheck, I go spend it. And I choose what I spend it on. And if it's too expensive, I don't buy that item, I'll buy another item. That's how the economy is built, not on the government printing money out of nowhere and let's build a road, let's build a school, let's build a train or train tracks, let's build the Hoover Dam. That's the problem, right? It's not, they don't understand it. Keynes screwed everybody in the 30s to the 40s. With the Depression was all Keynes's fault because he doesn't understand. His method is warped and wrong. Why are people following it? Because they don't like the gold standard, because since you have crooks in government, they can't print, right? They have to print so they can make money. They can't just sit there and not print. And so that's what's happening. God, this loud noise. I just renewed my lease, and one of the documents was, be cautious of other people, keep the noise down. My problem is I don't know if it's next door or on top of me. I thought it was on top of me once, and the lady says, I don't have any music on. And then it was the people next door. And I'm looking at the girl like, what are you insane? No, you can't play your music that loud. I gotta think. So anyway, so with that said, um, again, the Keynesians caused the problems. But see, if you're on the gold standard, you can't print and you can't go to war. And if you're a military guy, you can't sell your weapons because there's no wars because you can't afford them because you can't print more money. So if I have 1,000,000 ounces of gold, $1,000,000 worth of gold, I can only print $1,000,000, which is for the economy. But I can't go to war and I need another million. I can't just print the million out of thin air. Right. That's the problem. I can't. So that's why they don't like the gold standard. But it's the only thing that works, and that's why there's no wars in the gold standard. From 1879 to 1913, you had no wars. Then the central bank comes in the 19. Then you got World War I, World War II. It's a nightmare. You got all these wars now. I have no idea why. Giving all this money to the Ukraine, like, what is that about? That's so corrupt. So anyway, that's what you have. So comex should stop. Gold price should go to the roof now, but you don't want to sell it because you don't want to get back on the Titanic. You just fought to get off, and now that you're off, you want to go back on. Doesn't make a whole lot of sense. So that's what's going on with that. So that's comex, that's brics, economics we talked about. So again, as you ruin the problem with business is if you're on the gold standard, you can't ruin the dollar, right? The dollar will keep its value. And if you're buying the mug, if the cost is $10 and you sell the mug for 15, that'll never change on the gold standard. But as you print the dollar to zero, the value of the dollar drops. So you need more dollars to buy things. That's why a Pepsi was 10 cents in 71 is $2.50. The little can at the grocery store, $2.50. Are you kidding me? It's because this has lost its value. So it takes more of those to buy the Pepsi. That's why it's $2.50. Pepsi didn't raise the price. They just, the value of the dollar dropped. I love watching these old shows in the 70s, and it's a hamburger is 35 cents and stuff like that. And now, shit, you go to Coney Island, it's $7 for a hamburger. You don't even know what's in the meat. Fries, $3. I mean, what are you kidding me? That's why I eat at home a lot, but sometimes I just get a little bit bored and I'm out and I'm like, screw it, I'm gonna go eat. Like today I might get a barbecue because I'm just so we'll have to see. It's a Sunday. I'll probably go tomorrow. Well, we'll see. I'm trying to fast today, I think. So with that said, that's what you have. We talk about gambling. So did you win money on the basketball? What was your, what's your bankroll? What can you afford to lose? And still take care of your family and yourself and everything else. So it's funny when I text Daria and she's at work. She says, I'm at work. I can't text you. So I said, well, I'm at work now, but in my job, I can text you when I get your text. So, so the key to gambling, why do you gamble? For the excitement or to win? And it's a big thing how many people gamble for the excitement versus how many people gamble to win. And I picked that up from the movie The Gambler, which I talked about the other day, but I'll repeat because it's worth repeating. So that's your first question. Are you playing to win or are you playing for the action? So are you betting football to bet football or are you betting football to win? I started when I was like 9 years old, maybe 8, but I always played to win, but differently now. I would play for quarters back in the late 60s, early 70s. A quarter here, a quarter, half dollar, a dollar maybe. And that would be it. I would just play very, what I had, right? Did I play for the I played because I enjoyed watching football, but I played to win. When I got the money, it was very electric, very stimulating. So no, it's the same thing like, being with a girl. Like you do it for the fun or other reasons. So in this case, you're betting. Why are you betting? And you got to really ask yourself that question because you can, like the Gambler movie with James Conn, he lost 44,000. He was playing for the fun, and then he didn't want to lose, so he kept increasing his bet, and he kept losing. He lost his streak. Instead of playing, instead of playing to win, he would have taken out whatever he had his bankroll, $500, $1,000. He would have played it. He would have lost and he would have walked away. That's how I would have done it, right? So when I go play poker at MGM, it's $300, and if I win, I keep playing, and if I lose 300, I usually leave. Occasionally, if I'm getting like aces every hand and losing, then it's bad luck, or I'm getting good cards. I might play another 100, but that's it. So a lot depends on the cards. If I'm getting 2-9 and 3-7, I'm not there long. I'll stay an hour, lose $100 on these crap hands that I'm folding, and off I go. So really, that's the key to it. So why do you bet? That's your question. So did you bet the basketball yesterday? Why did you bet it? Did you bet it to win or did you bet it for the action? And they're two different animals. So you need to understand why you're doing it. Again, I do it to win. There's nothing better than, betting $1,000 on the Super Bowl on Mahomes, and Mahomes wins and we win, and it's free money, and you're like, yes, this is beautiful because I earned it, because I analyzed it. So it's beautiful. But what it did was it allows me to work in my finance job because it taught me how to analyze. It taught me what's important and what isn't. Time of possession is not important. What's important is quarterback, touchdowns and interceptions, a balanced offense with a running back and a receiver, a good defense, a decent coach. All these things are important when you're determining to bet, or in business, you're looking at all the variables, and that's what you're looking at. So we will see, but that's really what you got to ask yourself, and then you got to determine that. And then what you do with your winnings, since you're in this, you then go buy gold with your winnings, which is what I do. My paychecks pay the bills, and then the rest goes into gold. And gold's really my gambling now. And why do I do gold? Well, because I know the dollar's worthless, and to win, to make money. The difference is I'm not selling the gold to get back on the dollar. This is a rare example where you're just letting the streak run. And now if something changes, then we will adjust immediately. But at this point, comex is out. Look for gold to go to 10,000 an ounce. Why would I sell it at 2,300, 2,400? So in the Gambler movie, he doesn't have a limit. He doesn't have a bankroll. He loses 44 grand. He gets to 44 grand. He bets 3 basketball games at 15 grand, which is 45. So basically, if he loses, so he's trying to get even, right? That's his mentality. I lost 44 grand and I got 45. I got 44 grand now, but you know what? I can bet 3 basketball games and win 45, pay off the 44 that I owe, and then I've got my 45 back. You can't gamble like that. So then he goes to Vegas and he wins 50,000 on the table games, which he plays wrong, because if he's playing to win and he's catching streaks, he needs to keep playing. Backrack, you got 2 natural 8s out of 3 hands. Where are you going? Blackjack, you got an 18, you double down and get a 21. Where are you going? He should have been there for a month. Let the streak run out. And what you do is you pull back a little bit, right? So I'm up 40 grand. I take, I leave 5 grand on the table and pull 30 grand or so into my pocket. So I can only lose 5 grand back. That's how you protect yourself. Then as you keep winning, you keep protecting, and it keeps going on and on and on. And that's what I tell you to do in football. As you win, you increase your bankroll. That's how you win. And the bankroll grows, and then your bets grow. That's how you win, because you're on a nice streak. We figured out the teams. And that's what I tell the people. People buy from me in September, and I have a bad week because I'm still blind, because I don't know what teams I have yet, because of all the changing coaches and changing quarterbacks and playing these quarterbacks who were just drafted right away. So all that shit leads you to, you're a little bit blind. And then somebody will say, oh, you lost. I thought you were good. And I says, well, stick with me the whole year. I've never had a losing year. Just let me figure it out. So if you're going to buy from me, just buy small. If you want to buy from me the 3rd or 4th week, buy small. Just bet small. But you got to play me for a month. Now, I'm not saying it to get increased sales. I'm saying it because if you want to win, let me tie. Let me have time to figure out the team. I don't know CJ Stroud and Steve Young at Carolina. He sucked. I knew that. I had to figure out the Lions are an over team, and I had who knows what the Bears, Green Bay, you don't know what Josh Love is doing. And so you're waiting. Now you see, they started to score. So look for them to have a really good offense next year. We're not sure about the defense. So that's what you're looking at. The Niners, yes. KC, yes. Cincinnati, Burrow got hurt. Okay, now you're fucked because you don't know his backup. And so that's what you're doing with the team. So you got to bear with it. But we are playing to win. We know how to figure it out once we see the team, but we've got to see the team. So people got to understand that you cannot go 100%. You will have bad weeks. That's why you use a bankroll. So where James Conn would have bet me at 15,000 a game and lost, if he waited and got me in October and bet 15,000 a game, he'd have won them all. Then I'd be his hero, like the monkey who gave him the Lakers over Atlanta, and they won by 50. So that's really what you're looking to do. It's figured out, but you should be playing to win, not playing for the fun. If you want to play for fun, don't bet. Just pick the game, right? Hey, Greg, good job. So like tomorrow night, Connecticut 6 over Purdue. If you want to have fun, then just pick the game and don't bet it. If you want to make money, then you can figure out which way to go and then bet it, but it's got to be within your bankroll. So can you bet $50? Is that a problem? Okay, bet it. Then you have your little fun and you want to make money. The bottom line is you don't want, if you're losing gambling, you don't want to do it. Nobody wants to lose, or in the stock market or in anything. That's why nobody wants to lose money on this, because this is what's going to happen, right? You're going to lose money on this. This is losing money. So you either stay in and lose your money, or you get out of it and win with gold. Nice explanation. UConn all the way. Well, we'll see. They did cover yesterday. Purdue covered also. And UConn 6.5 and 146. So yeah, UConn laying second. I don't know how good Purdue is. I got to watch that game. It was on TNT or TBS, which I don't have, and I couldn't watch it. It was ridiculous because my internet provider doesn't carry it. So therefore, I can't watch it. So why the hell do you put it on a channel that half the providers don't carry, and you're not giving me a way to get it? It's just absolutely ridiculous. So anyway, you have to determine: why are you gambling? Why do you buy stocks? To make money. Why do you put your money in a bank? To make money, right? I get a 9% annuity. I'm in there to get 9%. Problem is the dollar's losing more than 9%. So what you think you're making, you're losing because it's in dollars. That's what I told the guy. So I go into the bank to get money for gold, and he says, well, you can put your money in the annuity at 9%. And I said to him, well, yeah, but I'd still be in dollars. I don't want to be in dollars. I want to be in gold because gold can't go down. The dollars are. So then he made this comment about elasticity and inelasticity. And I'm like, I have no idea. I don't care. It's got nothing to do with anything. It's a Keynesian thing. So I don't pay attention to it. And I says, what does that have to do with anything? You're just a Keynesian. I mean, you're not an Austrian, so you don't know anything. Anyway, I walked out and went and bought my gold. So why are we buying gold? We're buying gold to win, like we're banking a football bet, right? The difference is when gold goes up. So when the football game ends and you make the money, you cash it out and you buy gold with it, or you up your bankroll. But in gold, you can't get out because there's nowhere to go. You don't want to go back to the dollar and the Titanic, so you just watch your gold go up. So again, you're figuring out why you're gambling. Should be the same reason you're in any other investment. It is an investment. It's not an asset. It's an asset if you win, then it turns into cash, which is an asset. But you're looking at figuring out why you bet team A or team B or over or under. That's what you're really trying to do, which is what we've done. Team A, Mahomes, that's who we bet on, right? Not all the time, but when he was an underdog, it was a no-brainer. Mahomes is a dog, bet him. Winner, winner, winner. Buffalo, Baltimore, San Francisco. Why they were an underdog, I have no idea, but I was happy they were. They had a killer defense. They had Mahomes and Pacheco. Why are they an underdog to Baltimore? This is funny. I'm on eBay yesterday looking up players. I was looking at this to try to see PSA 10s. What's the value? And I saw one for a couple $100. Ron Weiss said to me, it's $50 ungraded. But I'm not sure because when I was looking at it, there was this card, but it was blue or something, and it wasn't out of 50. So how this is 50, it was just a regular card. That might be the $50 card. I'm not sure. This is a subset. Anyway, so I saw it for a couple $100. Not where I thought it would be, but it's not a rookie card. So, but again, I just bought it at a store for $50. It's like a no-brainer. So that's the point. All this is investment. All this is you got money and you're trying to make more money with it. Most people aren't skilled in that, but they do it anyway. So I'm skilled in it. All from my football betting. It got me into analyzing, which got me into finance, which got me into economics. This economics is not any graphs or charts. It's just simply understanding ideas, which is perfect for me, and I can analyze that. So that's what you're doing. So you got to feel, am I gambling for fun or am I gambling to win? And I've always gambled to win. And all I'm saying to you is be careful. If you're just gambling for the fun of it, then, and you got to bankroll it. So when you do all these, how many wins will Detroit have? Well, over under 9 for the year. You shouldn't be betting hardly anything on that. That should just be a very light bet. I know Nick has a big bet on NC State to win, which they lost, so he's out of that. But I hope he didn't bet a lot on it. I got to watch that game on YouTube to see what happened because I'm surprised Purdue, what happened at the end. I'm getting 10, 9.5, I think, and they lose by 13. So I should have been winning close near the end. Did Purdue hit a 3-point shot or did I hit a 3-point or I missed one? Anyway, but Connecticut came through. So anyway, that's the question. Why am I betting? So in James Caan's Gambler, he's betting for the action. And he's taking high risks. He tells the guy, well, I could win all my bets, but it wouldn't be fun if I just bet the games I knew I would win. So I bet these riskier games because it's entertaining to lose my money. So he goes and bets 45 grand on baskets, loses, then bets a 50,000 on a basket and loses. So he loses 100 grand in basketball, and he just won 45 grand playing craps and backrack and blackjack. And then he still owes the 44 grand. I mean, it was like insane. It was like, dude, you got 100 grand. All right, how do you not know you lost your basketball bets? You still got 45 grand. You owe the guy 45 grand. You got the money, pay him. Oh, no, I'm going to gamble it. It's just he needed the action and he didn't want to lose, but he didn't know how to win. So he was playing he was playing to lose. When he lose, he wants to get back to even, but nowhere in it was how to win. So that's the point of the gambling. So if you're betting football, baseball, this college basketball, you need to understand the concept of why are you betting the team. So you look at Connecticut, you look at Purdue, they both have big men. Who's the better coach? Who's got the better defense? Who's the player? So when we looked at it, we said, well, let's see. Purdue is an 84 offense, 70 defense, and Connecticut's an 81 offense, 64 defense. They got quite a better defense. They both have big men. They both score a lot. One's 81, one's 84. So they're pretty even there. The matchup, they both have big men, should neutralize each other. Can Purdue play without their big man? Connecticut can. And I think that's where it comes down to. Connecticut's been blowing everybody out, but they haven't really played anybody. If we look at the bracket, all right, they beat Alabama, who wasn't that good. They beat Illinois, who was a 3 seed. I don't think there's more. And they beat San Diego State, who was a 5 seed, Illinois, who was a 3 seed. Then they get to the Final Four and they get a 4 seed in Alabama. They haven't played anybody good. This is my complaint about this tournament being a national champion. It's not. It's Connecticut getting the luck and playing a 3 seed and a 4 seed. They'll finally play a 1 seed in Purdue. Too much lemon. But if a normal playoff, they would have played North Carolina, best 2 out of 3. Duke, best 2 out of 3. Kansas, Kentucky, UCLA. I mean, you'd have played the top teams that should be conference champions. So they should play them all 2 out of 3. Then we can see what's really going on and who's who's really the best team. This way, you don't know the Connecticut's. They haven't beaten anybody. And I know they win by a lot, but again, they're beating Illinois, they're beating Alabama, they're beating San Diego State. They beat, I think, Grambling or something. I mean, it's an easy bracket. They didn't play in North Carolina or Duke. I think in their bracket, the two seed was Arizona, I think, or Iowa State, one of them. I mean, these aren't very good teams. Yeah, North Carolina was in the other bracket with Alabama and then Houston. So this is the problem. They didn't play anybody. But that's how you have to figure it out. What do you think's going to happen? And you got to base it on history, and you got to base it on usually defense wins. So who has the best defense, which is Connecticut. You're laying 6.5, but Purdue's defense has been pretty good. So then you maybe go to an under because Purdue's holding their opponents to 50 points a game, and Connecticut's playing strong defense also. So you go, well, let's go under. So that's probably why I'm playing the under, is I think Purdue's defense will keep the scoring down as well as Connecticut's. So you have to have a game plan. How are you picking? Just like anything in life, you don't know about gold, so you find somebody who does, but you've got to be careful that he knows about gold or he doesn't really know about gold and you're listening to him. Like Andy Scheckman, he doesn't know anything about gold. He sells it. That's all he knows about it. He can't explain it. You listen to Egon and he'll help you. You listen to me, of course, but see, I understand it and can explain it to you. Like I said to Bobby for his daughter, well, you can't take gold to the grocery store. That's not the right question. I mean, you're collecting gold because you got to get out of the dollar. What you do at the grocery store, you're still going to use dollars until they're not there. Then you're going to use a gold-backed currency, hopefully, or you're going to sell a little bit of gold to get whatever the grocery store is going to take. They're going to take some money, right? Look at Zimbabwe with the high inflation. They're still taking money. I guess they're taking U.S. dollars, or now they're taking this gold-backed currency. What will they take? And that's what you're going to trade the gold in for at that point to buy the groceries. See, Zimbabwe didn't go out of no food and everything else. So that's what you're looking for. So you're asking the why. Why are you betting? And then it's, are you betting to win? Or are you betting for the action? And then how do you win? What's your bankroll? How much can you afford to lose? Can you afford to lose $100 or $20,000? And that's your bankroll. So if you can only lose, $500, that's all you can play. You want to play 10,000 a game, but you don't have it. So you play, and then most of these sports books online, or if you're in Vegas or even Detroit MGM, you need the money. You can't just, there's no credit. There's credit with a bookie, but that's it. So you've got to understand that. So be careful with the DraftKings and the FanDuel. They're just Ponzi schemes. The odds, I'm sure, are terrible. Any of the MGM, the odds are terrible. So that's what you want to do, is you got to ask yourself why. Once you understand that, then you're good to go. Let's see. So that's gambling. Football draft we've gone over. It's the 7th. I think it's the 24th or 5th, so it's in a few weeks. We'll see what the trades are. We know what the teams need. The teams, most of them need, like Kansas City just needs a little defense, maybe a running back. Certain teams need quarterbacks, like Washington, Minnesota, Detroit, Chicago, Minnesota. I mean, so some teams, need the quarterback. Some teams have it. So they go to other needs, which are usually running back or defense. I love when these teams go to offensive linemen because it's a money issue because that's the cheapest position. So they waste their first round pick with an offensive lineman that means nothing. Um, who's on your team now? Do you not have offensive linemen on your team? Didn't you draft these guys so they should be they're pros? So why waste a first round pick on an offensive lineman that you could get in the fifth round who's exactly the same? Because offensive line, it's all continuity, and it really doesn't matter who you put out there. So that doesn't matter. It's the play calling, it's the quarterback, it's the balance. We got a running back and a receiver like Kansas City. It doesn't matter who we got on our offensive line. Anyway, that's what you're looking at. So drafts coming up, baseball. We looked at yesterday, but we can look at it today. All right, we got a bunch that have started. Toronto, New York. I don't have the pictures here because the game started, so we will ignore that. Philly, Washington, Pitt, and Baltimore. Oakland beat Detroit yesterday 4-0, and they're winning 2-0 in the first. The Mets 1-0. Bobby's playing there. All right, so let's go where we are. 210, Chicago, KC. We got Crockett 1-1 with a 1.38 for the White Sox. Alex Marsh 1-0 with a 1.29. So this looks like an under, just hypothetically looking at these ERAs. The White Sox are 1-7, KC's 5-4. Interesting. So the White Sox are the worst team. That's why KC's favored in the game. But to me, it looks like an under. Miami 0-9, St. Louis 5-4. Max Meyer 0-0 with a 3.60, and Kyle Gibson 1-0 with a 2.57. So we like well, it's hard to not bet St. Louis because Miami hasn't won a game. So you basically just keep betting against Miami. The Dodgers and the Cubs. Gavin Stone for the Dodgers 0-0 with a 5.40 ERA. Shohei Magana 1-0 with a 0 for the Cubbies. The Dodgers are actually the favorite here. We have to learn the pitchers like we learned the quarter. We don't know who these pitchers are, so we gotta learn that. Is the Cubbies pitcher 1-0 with an 0.00 ERA really accurate? Tampa Bay, Colorado. Ryan Pepple for Tampa, 9.53 ERA against Dakota Hudson, 0-1 with an 0 ERA. So we don't know. Tampa's 4-5, Colorado 2-7. San Diego and the 49ers. Waldron for San Diego, 0-1 with a 9. Logan Webb for the Niners, 0-1, 6.52. San Diego 5-6. Frisco 3-6. Frisco is a big favorite here. Hard to be a big favorite with the pitchers 0-1 with the 6.52, huh? So you could take San Diego, or if you think his pitching's crap, then I would say go over 8 with a 9 pitcher and a 6.5 pitcher. You would think there'd be a lot of runs in the game. So look what we're doing. The dynamic is the pitcher and the ERA. The better pitchers have the lower ERA, so that's who you want to bet on. You got a guy like Matt Waldron, 0-1 with a 9 ERA. You would never want to bet on him. So you either bet the other team, San Francisco, or you bet the over. So you're looking at the pitchers, the quarterback in this, it's the dynamic of how are you choosing who to bet on. And then here it's money line, so that's fine. And you can't just play the dogs. I mean, it doesn't work that way. Oh, I don't want to play anything over minus 170. Like, Well, why not? I mean, if the game's going to win, the game's going to win. You'll do it in fantasy football or prop bets. Why won't you do it in baseball? Boston and California, we got Tanner Hawk, 1-0 with an O ERA. Chase Silson for California, 0-0 with a 9. Boston 6-3. California's 5-3. So hard to say. It looks like a Boston because the guy's 1-0 with a 0. The other guy's 0-0 with a 9. So superficially, but you got to dig into it. Houston and Texas. Houston Blanco, 1-0 with an O. Texas Dane Dunning, 1-0 with a 4.26. Houston's 2-7, surprising. Texas 6-2. Texas has won the World Series last year. We don't know what Blanco on Houston, 1-0 with a 0. What did he, and then Dunning on Texas, 1-0 with a 4.26. So superficially, if this Blanco is as good as he said, you would bet them. Would you go over or under? Well, the over-under here is 10.5. I think Texas has a small ballpark. So do you have enough information to make the pick? No, because of the pitchers, you don't really know them unless you live there like Alex lives in Houston. Maybe he knows the pitcher better. Postpone game, Cleveland, Minnesota. Cleveland is 7-2, Minnie's 3-4. So you keep your eye on who's hot. Anyway. So that's what you're looking for. So you look at pitchers. I'm on Yahoo. You can go to stats and see the stats of the pitchers. But you can see like Chicago's 1-7, the White Sox, and KC's 5-4. They've only played 8-9 games. The pitchers maybe have pitched twice. Do you really have a good idea? And then let's say this KC guy pitches the White Sox and they're terrible. Does that make any sense? That's like college football where you're betting on, the team plays a high school team, right? Texas plays, North Carolina AT&T, and they win 73-0. Did you learn anything? No, because they played a high school team. If they beat Oklahoma 73-3, then you learn something. So you got to be careful who they played, and is it really a correct ERA? And that's really what you're trying to do. And so that's how you bet baseball. You can't really play offense, defense, because the pitcher controls everything, right, Bobby? So if you're going against Verlander, it doesn't matter what the other team hits. They're not going to – they maybe get a run or two, or Scherzer or McCullough. So you got to be very careful. The pitcher will shut down the good offense, so you can't – it's just like football, right? You got Kansas City, Miami, and they won 26-7, even though Miami's got a good offense. The defense will shut it down. So, again, it's bankroll, and you're looking how much can I afford to bet. And then it's different because it's money line. So here KC's 130 to win 100. Okay, so what do you want to do with it? Over under, I think, is 110 normally. So you play your bankroll, but it's a little screwy because it's money line. So you be very selective. Let's say you got a $5,000 bankroll from football. Now you're going to use it for baseball. I would still maybe go 100. I don't even know if I'd go 100 a game, depending on how many games you play, because you're going to play every day. Beauty of football, it's Saturday and Sunday normally. So you're gearing up for Saturday's games and you bet them, and then you're gearing up for Sunday's games and you bet them, and then you see how you do. And they're not every day, and that's why Vegas is pushing to have these Thursday games and Friday games and Monday night games, is to get more betting in, because they know you're going to lose, right? 99% of the people lose gambling sports. I believe they do it for the action, not for the money. And that's why. So they want as many games and all these props and everything else, who's going to get the most yards and, what color Gatorade's are going to be, because they know if there's a lot of bets out there, the suckers will bet them and lose, and they'll make more money. So they're just looking for more action. It's sort of like you're a grocery store and you just have chips, and then you go, well, you know what? Let's put more food out there where you can sell more. So we put dip, and then we put pop, and then we put juice. You know, we might as well put fruit out there, and then veggies, and then, and you just keep growing with more options because people will buy more, and then we'll make more money because we've already got the building. Now it's just the middle of putting more stuff in with the same building space, and we'll make money. I bet you these grocery stores, like in Barcelona, these little ones where you come in and you can get, everything, but it's little. And, it's like going into a 7-Eleven, but yeah, I mean, look how much stuff they have. The difference is 7-Eleven is they just have chips and candy. It's a very unhealthy thing. All right. Yeah, Daria's going to bed early. It's only 9 o'clock there. She doesn't feel good though. But anyway, so you got to do your bankroll, and you always need a reason to do everything. Why am I buying gold? Why am I getting out of dollars? Why am I buying Mahomes cards? Why am I not buying Lamar Jackson cards? Oh yeah, it was a funny thing came up. So I'm on eBay and I'm looking for the Mahomes just to get the value of the Mahomes card. And in this set is Lamar. And Lamar was going for like 50, $60 or something like $90, whatever. And there's Mahomes. So it was like buy it now or best offer. So I made him an offer on the Lamar card of $1. I was like, who the hell would buy a Lamar card? So I offered him $1 for it. But the Mahomes, I know, again, I'm just curious what this card's worth, but I'm understanding now there's a regular card and then there's this gold card. So I'm looking for the 50 count. And they were a good 300 on, and a lot of them were nines. I did see a 10, I think, for 300, but I was expecting them to be much higher, winning 3 Super Bowls. But again, that's what we run into because of the economy. People don't have the excess money. So in other words, you make 100 grand, your costs are 50 grand, which leaves you 50 grand to spend. And what's happening now is you make 100 grand, your costs are now 70 grand, leaving you 30 grand to spend. So you still have some spending, but it's a lot less. So you're not buying cards and stuff. Hello. ARALC. I don't know how to pronounce you. I don't know. Hello. I'll call you AR. Hello, AR. I hope you're well today. If you have questions, comments, feel free to type them up. So I made the Lamar one, but whatever we do, you want to know why you're doing it. Why are you buying gold? Why are you buying Mahomes? Why are you betting on baseball? And you need your key thing. So football, we're really looking at quarterback and defense, but we need to have a feel for who they are. So we know how to bet Mahomes and Joe Burrow, Herbert, maybe now that we got Harbaugh. We got to learn how we bet the new coach. We got to learn how how good's the quarterback. So we don't know what Caleb's going to be. I don't think he's going to be that good. He scrambles too much, and he's out of that Oklahoma offense that doesn't produce anything. Hurts is not good. Kyler Murray's okay. I don't mind him, but he wants to run too much. So you're looking at that. That's why you're going to have 5, 6 new quarterbacks. So you got to see how good they are. We have an idea. We think Penix, Daniels, and Bo Nix are the best, and then Hartman. Caleb, I'm a little bit, and then Drake May and J.J. McCarthy are terrible. I don't know what you're watching to see that you think they're good, that you would draft them in the first round. I wouldn't draft them at all. I liked last year's Hayner and Hooker and Stenson Benson were much better. And then going from there, but we got to see. Now, Minnesota, it's going to be a reciprocal effect because they don't have a quarterback now. If they have to go with their backup who finished the last 5 or 6 games, they're in big trouble. So we have that, and then we have then you're going to have, that's going to determine how you bet them. Depends on their quarterback, but if he's a rookie, he's not going to be that good anyway, unless they get Penix. He'll be good, and Daniels will be good, or Bo Nix. That's what they need because they want to run a passing offense. Not a Caleb, and for sure not Drake May or McCarthy. They're not quarterbacks. So again, like I think Drake May, they think he's an athlete. Yeah, but he's not a quarterback. You need you need somebody who can throw to the receivers. That's why I get down on Lamar. He doesn't know how to throw to the receivers. So you're using half your offense. He's running. You're barely using your running backs. And then, okay, now they got Derrick Henry. Does that mean they're going to run more? I doubt it. Should be good, but they won't beat Kansas City with Derrick Henry. And how much does Derrick Henry have in his tank? So you have that to worry about. Pittsburgh, Russell Wilson, how's it going to work? What's wrong with Russell Wilson? San Diego's got Harbaugh. The Rams lost Aaron Donald. Frisco really didn't lose anybody. They got a better defensive coordinator, hopefully, because they have a killer defense. So they should still be the best team in the NFC. Philadelphia, what's wrong with them? Their coaching is terrible. Green Bay looks like they're better. Detroit hasn't improved. And again, you got to see they need defense desperately. So otherwise, then we'll just play them as an over team. Next year, they won't sign Goff because he's going to cost them. They won't sign McLeod because he'll cost them. Because Detroit doesn't re-sign any players except for Stafford or Barry Sanders is the only, sure Hall of Fame guys that Calvin Johnson that they kept. Everybody else, all the linemen gone. All right, you're here. No, you want to make $5 million and then go somewhere else. New England was like that too because they wanted to spread the money around and not have one guy make a lot of money, which is very good. But the Lions don't. The Lions just have shit. They just want young guys because they don't have to pay them. Because their belief is, we make money from the revenue. If we don't have to pay our players as much, that's more money for us. We don't care if we win. We're Ford Motor Company. And that's why they don't win. That's why I don't root for them. And that they suck. And I make a lot of money betting against them. So you need the foundation for everything. And that's really what you're trying to do is grab the foundation and go from there. So that's your first thing. Once you have that, then once you figure out how to bet football, then that's the key is figuring out how to bet them. That's why you come to me, because I figured it out. But I'm 1 in 10 who have figured it out. Most people haven't. They don't know what variable to look at. They want to use algorithms or analytics or whatever. It doesn't work. So that's where you're at with it. So that's my point. That's why you got to learn. You got to know why you're buying gold. Now you can listen to me and I explain it really well. And now you understand why you buy gold and why you get out of the dollar and how important the printing of it is. So then you understand all that. Then you can go ahead. The people that say, well, you can't spend gold at the grocery store have no idea what they're talking about. And, they don't want to listen and learn and understand, oh, that's really not the issue. Because they'll sell it for the medium of exchange, which we don't know what that is. So you're trying to do all that. Anyway, time to swim. I'll be on tomorrow. It's funny. Some days I get like Bobby's here and Luke's here and Greg and John, and I get 40, 50 people watching. And then some days I get very few. But I know people watch the video. So that's the beauty of it. You can ask questions here. Instead of just doing this as a video and posting, I do it like this, where Greg and John can ask a question, or our new person, AR, can say hello and ask questions or comments. Why should I buy gold? Or, stuff like that. And off we go with it. So that's what I try to do, because people don't understand economics, and it's not hard if it's Austrian. It's very easy if it's Austrian. Yeah, Oakland 5-0 over Detroit. They beat them 4-0 yesterday. Same old Detroit. They have no offense. And apparently no pitching. It's funny when you listen to the announcers, how they're talking, how good the pitching is for the Tigers. 4-0 yesterday to Oakland, 5-0 today in the second inning to Oakland. Yeah, they got great pitching, sounds like. Terrible management, terrible GM, coach. They totally ruined the franchise. But these people, like I heard on the radio, should you boo Javi Baez as he hits 110 and he sucks? And the problem is because he makes $20 million a year. Should you boo him? I mean, I wouldn't waste my time even listening, going down to the game and listening to it. Why would I waste time? The only time I listen is in the car on the way to swim or back. So why would I waste time, one? And then two, what would I, would I boo or not? I don't think I'd give it enough attention to even know he was up if I was at the game. I wouldn't, it's Javi Baez. Who's that guy, right? So because he makes 20 million, people boom. Now, what I would do if I was the owner or manager of the team, I'd just cut him, because he's hurting the team. That's why they keep being in last place. So I don't want that guy on my team. Now, I would have cut Cabrera 5 years ago when he's hitting 210, and I'm paying him $30 million. That's why I would never sign a 10-year contract. You got to be out of your mind. I would do a bunch of maybe 2-year contracts. If you don't like it, go play somewhere else. I'll sign you to 2 years. You prove you're still hitting, I'll sign you to 2 more. But I'm not doing a long-distance, long-term contract. And that's the problem. So, Cabrera's hitting, 200 for the last 5 years, and he's making $30 million. He's fucking up your payroll, and you can't get any good players because it's a salary cap. You spent all your money on one guy, and the guy sucks. I would have cut him, and then I could at least get some other players in. And the Tigers keep having these young players, and they keep selling the same old shit. Well, this guy's really good. This guy, and the announcers are living in fantasy land. Yeah, this guy's really good. Oh yeah, look at him. Look at that. And then you watch him, and the guy's hitting like 150, and you're going, Okay, this announcer's out of his mind. So that's the problem, like with these organizations. See, baseball, I don't understand. You get a good player, you trade him for more picks. I don't want more picks because I don't think the picks are going to do anything. And so, and then also if I'm running a baseball team, I'm drafting college players out of UCLA and Arizona and Cal State Fullerton and some Florida programs, Texas. That's where I'm drafting my guys. I'm not taking these high school guys. That's a bunch of crap. I think it's just cheap. I don't know. I don't get it. You can't tell anything about a guy in high school because maybe LeBron was the exception, but you can't and that was basketball. But in baseball, I can't tell anything. Oh, the guy strikes out high school players. Oh, whippy. Let's see how he does in college. So I would definitely draft, like, how hard is it to draft a good shortstop who can hit out of UCLA or good outfielders that are fast, that can catch, that can hit in UCLA? I mean, there's a lot of pro pitchers. So, Roger Clemens went to Texas. So you have those players. So why would you dick around with high school players and pitchers? If I was the manager now, I'd have a 4-man rotation, and they wouldn't pitch 5 innings at 100. They would pitch as long as they can go, no pitch count, 200, 250 pitches a game, fine. If their arm can take it. I'm not pulling them out because they're winner. The pitcher has to know how to win. When you pitch them 5 innings, they never learn that. And you got all these guys in the bullpen, so you end up with a team full of lousy pitching because they've never been in a situation that they had to work themselves out of. And I think it's ridiculous. And 100 pitches is even more ridiculous. Why are you doing 100 pitches? What is the value of that? Why do you have him on the team? This guy can only throw 100 pitches every 5 days. He's wasting my time. So that's like a football player, like who could. He's the running back, but he can only carry the ball 10 times a game. You gonna want him on your team? Well, you don't want to tire him out. See, you don't get this bullshit in football that you do in baseball. Oh, just 5 innings, 100 pitches. Then we got to pull them, and then it's 100 pitches for everyone. Well, they're not all the same. I could pitch 100 pitches every 4 days and be fine. I did pitch, but not at a high level. I pitched in Pony. So that was like after Little League. I didn't pitch much in Little League, and then 13, 14 I pitched. But I didn't know what I was doing. I didn't know how to pitch. I could just throw the ball over the plate, but I didn't know anything about pitches. I couldn't throw a fastball, curveball, changeup. And I learned it when I was teaching my daughter how to fast pitch softball, girls. Then I learned how to pitch. Oh, you snap it at the hip, and then if you want a curveball, you turn it over. If you want a rise ball, you flip it up. If you want a down ball, you turn it over, and screwball, you screw it. And then I learned how to throw pitches. I was a better fast pitch girls softball pitcher than I was a hardball, but I didn't want to pitch. I was more. I played second, short. I was fine with that because I was left-handed, but I was playing right-handed because my father says, "Well, you can play positions as a righty." Yeah, but I'm left-handed. So I was 5 years old when I started. And then it was about figuring out how to throw right-handed. I could hit right-handed fine because I golfed right-handed, but I couldn't, it took me a while to throw. My arm hurts because I didn't know what I was doing. And then I could play more positions, but I would have been a dynamite left-handed pitcher. I could have played first base. I could have played outfield. So I don't know. The only positions I probably couldn't have played was second and short. So who cares? So because I didn't have the arm strength, because I'm left-handed playing right-handed, I played second base and I learned how to field ground balls. And I was very accurate. I don't make too many errors because I concentrate and I use reflexes, and I'm able to catch everything. Anyway, that's just me. So using all these skills is what you're about. So you're trying to figure out things. Women, you're trying to figure out. Um, you don't want the rejection. So how do I not get the rejection? You look at her and you see how she looks at you. She looks away. You don't waste your time. See, just because you see a pretty girl, you don't just walk right up to them and ask them out. That's like making a bet without realizing who's on the team. Why would you do that? So you kind of watch the girl and see her reaction. Then you kind of walk around her and see how she looks at you, if she likes you. And then if she does, she'll let you know. And then you can ask her out. But you got to stay stoic. There's no reason asking her out just because she's pretty. She might be not nice or might not like you, or, what type is she? And so you got to learn all that. And that's what you're trying to do. Like in football, you're trying to learn, what am I looking at to bet? So that's what you're looking at with girls. So anyway, I think I am going. So that's the key really to everything, is you kind of learn what it is, and then you bet on it, or ask the girl out, or play the poker, whatever it is. You're looking for that gold. You're looking, why am I buying? You always have to have the why. Once you get the why, you can move on and feel real comfortable why you did it, and answer girls who say, well, what are you going to do with the gold at the grocery store? I'm like, why are you at? Who cares? I mean, what do I do with a Picasso or a Rolex? I mean, it's the same thing. It's an asset that has a value. Why would I, but what am I going to use for money is really the question we're asking. All right, everybody, have a good day. I am off to the pool, and I got to figure out what I'm doing for dinner. If I'm even eating, I might not eat. Uh, I'm just so sick. First, it was my knee. Now it's my foot bothering me. So I don't know what I'm going to do. But I know I'm going to the pool and soak my foot in the hot tub, and I'll do. Times when I run in the pool, tends to help my foot, gets the blood flowing in the muscles, and I find it's very good for my foot when it does hurt, that I go into the pool and use it, or the hot tub. So that tends to help it. So I will go back there. All right, everybody, have a good day. www.teaserking.com. The site is having problems, but I have called the iPower, the server people, going, why am I getting this error and I can't use it? So I chatted with them yesterday. I then they sent me an email, we're working on it. Okay, why do I have to tell them that there's a problem? Wouldn't they see these errors? That's the first problem. And then the second problem is getting it fixed. Fortunately, it's not football season. But what are you going to do? Anyway, hopefully I'll get that cleaned up. All right, everybody, have a good day. It is the 7th, which is always lucky for me. So I will talk to you tomorrow. I guess early afternoon. I don't know. I'm still going to the pool and then doing the thing, because I don't want to go to the pool too late. I don't want to eat real late. So we will see. All right, everybody. Have a great day. Take care. www.teaserking.com. Thank you very much.